Welcome to Insights. I'm Eric. I want to do a dollar review here after some discussions we had posing the dollar against different markets like Bitcoin and the commodity markets. I think we need to talk about the U.S. dollar index in itself. So let's open up a matrix here, and I think this is an important discussion from the standpoint of what central banks around the world are doing. Over the weekend, it was revealed that the Australian Central Bank doubled down on their position unexpectedly and is buying more bonds in order to protect, the yield curve. And this is a conversation that's going on not only for Australia but other parts of the world. Is brought in the Fed into the discussion. What are central banks prepared to do? When the news came out, it was obvious that it was beneficial for the bond market, but it's pretty fleeting. The rally that we saw in certain parts, and even here in the U.S. on the long end of the curve, have already started to fade. The central banks can't tackle this problem. Can't be the buyer of last resort for governments indefinitely. Eventually, the invisible hand will recognize that they're the sucker, and they're going to unload to them, and it's going to pressure the markets. Normally, you're going to say, well, that's going to control interest rates, and that will be detrimental to the U.S. dollar. But again, we can see the dollar is rallying here today after an unexpected turn on Friday. It looks like it's attempting to close above this swing high here and make a run for this swing high. Ultimately, if it takes out this swing high, the ball's really going to get rolling. What we noticed in the evolution of the trade is the dollar index is down. We also have every other anti-dollar play is in up rally, but this could be an important transition. The dollar index itself, it represents a basket of these currencies, but we're going to look at the composite major currency DI, which is an equal weighted DI measure rather than just the dollar index DI, which is largely a dollar euro play. But ultimately, the evolution of the trade is still down. I mean, all the trends are down. For the dollar's sake, the weekly trend's a bit extended, but nothing's really sticking out. It's the real problem lies here in this energy build, and we're going to see in a moment that the energy build in the major currencies DI is also similarly positive and has to be released, and that release is definitely strong enough and the build is big enough in order to release and flip the primary trend. Now, you can't anticipate this because there's no way the primary trends, the only way you want to nibble against a downtrend, the primary trend for the dollar is down and all these markets that are up against the dollar. And the only thing you could do is probably play the euro, which is in primary trend decline. And if you want to buy a big bullish energy build against that primary trend decline, you could do it that way, but the yen is not a very active or not a very fast moving play in terms of major currencies. If you're going to buy UUP, it's not in primary trend 1 or 2, so the only thing we can do is wait for the flip. Now, what are the chances of a flip? Well, as we said, the energy build, and this is the composite major currencies DI, the energy build is quite large. It produced one of the largest builds that ultimately didn't respond to the price, or the price didn't respond here. This is just looking at builds over 60. We could see a similar setup here where you had a build and it turned the market for a bit and then it rolled over, and then you had two smaller builds again, which then triggered a much bigger advance or a longer duration advance. But really, the oscillation from these bullish energy builds downwards from here to here, these are bullish oscillations. They tend to create rallies here, 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 here. Some of them are bigger than others, but ultimately the end response, even though there was a big rally here, but it came off of a much smaller energy build, it's not labeled. But this oscillation is going to be bullish, and why? Because the dollar is supposed to be dead. And well, that's what the majority believes, but the US dollar is still the world's core currency, and as such, the periphery currencies are going to be challenged. They're going to blow up. Debt burdens are much greater in other places, and you can cancel a currency, and that leaves whether it be Canadian dollar or the euro. I mean, they're going to try and cancel these currencies, and that leaves the dollar, which is one of the most stable currencies in the world right now, as something that hasn't been canceled, as basically the cleanest shirt in the hamper. Or the cleanest, dirtiest shirt in the hamper. I mean, there's no pretty way to look at this. The dollar's in a bad situation, but it's better off than everywhere else, and that's one of the reasons why their safe haven flows into it. And it's one of the reasons why you had such a large energy build here. If we turn back up or generate some sort of rally, it's going to flip everything else down. We're going to have to wait for it. But it's not something to dismiss. I'm not sure the central banks can handle this. They may believe they can control the yield curve, but ultimately the yield curve is controlled by the invisible hand. They're just going to get run over. Anyone who's read Hoover's memoirs through the Depression, he talks about it, and he alludes to a cannon being tossed around a ship violently during a storm as a way of the invisible hand smashing through barriers that public policymakers try and attempt in order to control markets. So those observations suggest that this is not something that's unique. It's already happened before, and we're going to see the cannon tossed about the deck of the ship soon here, whether it be this year or in 2022. The further the dollar rallies, and we'll go back up here, the more difficult it is to control. This dollar is going to have consequence. A dollar rally will have a consequence. If we can close above this swing high, it'll be another layer that we can peel back on the onion. If we close above here, I think the real fireworks start to happen. So keep an eye on this. Recognize that the energy build is still there, and we're still very early within a bullish energy build release, which is ultimately causes a rally in the dollar index. And it's going to have some effect on these trends, the primary trend, the weekly trend, and the monthly. First, the day or weekly and the daily. The daily is going to flip first, followed by the weekly, and followed by the monthly. The alignment is really powerful. One or two of the time frames will flip at the same time, and all three would be unbelievably powerful. And we'll talk about if it happens, but it usually sets up extremely powerful rallies. If you have any questions about the dollar index or any of these major currencies, you can contact me directly. We can have some sort of conversation about that because it's complicated stuff. But ultimately, you need to understand that the dollar safe haven status has nothing to do with central bankers' control. If central bankers could control this, we'd be digging ourselves out of the hole, and there is no way they're going to be able to do that. Central bankers existed during the Depression, and they had a very difficult time solving the problem back then, and I would assume that we're going to have another repeat of that with a different twist. The world repeats, it just doesn't look the same. The themes are the same. So if you have any other question, let me know. If not, thanks for watching the video and enjoy the trading week.